So today we're diving into a story that's, it's so much more than just another piece of financial news. It's really this dramatic saga. You have this deeply held conservatism meeting the unstoppable force of market change. We're talking about Vanguard, and specifically the collapse of their most famous philosophical wall.
It's a huge deal.
For anyone who follows the investing world, Vanguard is.
Mm-hmm.
It's a name that just means stability, right? It's safe, long-term, low-cost investing. It's all built on the legacy of its founder, Jack Bogle.
Almost sacred, yeah.
And we've used this metaphor from our sources before, and it's perfect here. If the financial world is this vast ocean, Vanguard isn't a speedboat. It's not even a yacht.
No, it's the giant aircraft carrier. Or maybe a massive iceberg.
A massive iceberg, exactly. It's immense, it's predictable, and it's supposed to be unshakable. And that image, that Vanguard fortress, is just so key to this whole story.
That image is spot on. I mean, for decades, they built that fortress on this philosophy of slow, steady growth. They rejected anything that felt like, speculation or gambling.
Anything flashy.
Totally. And for years, while the rest of the world was going crazy over cryptocurrency, over Bitcoin, Vanguard's policy was just simple. It was absolute. They just said no.
A flat no.
Yeah. Their position was always that crypto was just too risky. It didn't have any inherent value, any intrinsic value. And they just refused to let their customers get involved in something they saw as fundamentally dangerous.
So if that fortress was so strong, so rooted in their core philosophy, why are we even talking about it now?
Right.
That's our mission in this deep dive. We're going to unpack exactly why this financial giant has finally shown this huge, undeniable crack in its wall. We need to get what this pivot means for the financial world, and maybe more importantly for your own approach to investing.
And it really starts with the pressure, because you have to understand this change wasn't voluntary. It was completely driven by the market.
Okay, so that brings us to where the cracks started to show. Imagine you're one of Vanguard's millions of loyal customers.
Mm-hmm.
You trust the brand, you buy into the whole Boglehead thing, your retirement is anchored there. But for the last few years, you're just watching everyone else, all these other platforms, jumping into the new digital asset wave.
And our sources just capture this frustration so vividly. It's that feeling of being left behind, right, while you're trying to stay loyal.
Yeah.
It's like the rest of the world has smartphones, and your provider, the one you trust, is forcing you to stick with a landline because they keep saying it's safer. That created this just tremendous discontent inside their customer base.
And it wasn't just customers yelling into the void. This pressure got amplified, like tenfold, by Vanguard's biggest rival, BlackRock. They didn't just open the door to crypto. Their CEO was out there publicly praising Bitcoin, positioning them as the leader. That created this really intense, very public challenge.
The fallout from that was immediate. You could see it. The sources talk about a huge social media outcry, these organized calls to boycott Vanguard. And this is the one that really hurts.
The money moving.
The money moving. Actual customers pulling out significant assets to go to platforms where they could get the crypto ETFs they wanted.
And Vanguard's first reaction was, what? Just silence.
Silence, yes. And that initial silence was described by some analysts as, and I love this phrase, the arrogance of an old noble resisting emerging trends.
Wow.
They really seemed to believe their reputation, their philosophy was strong enough to just ride out the storm. But, here's the thing about finance on this scale. That arrogance, or maybe let's call it stubborn principle, it can't hold up forever against the sheer movement of capital.
So this story isn't about Vanguard suddenly falling in love with Bitcoin?
Not at all.
It's about that old iron rule of money.
Precisely. The core principle here is so simple. You cannot resist the flow of money forever. The saying, water flows, and eventually the rock just wears down.
Right.
And when the market demand gets big enough, even the strongest wall, even the Vanguard fortress, it has to give. And this policy change, that's the moment it finally gave way.
Which brings us right to the pivot itself. So what's the big news that finally cracked that wall?
Vanguard is officially allowing its customers to trade cryptocurrency ETFs, specifically the new Bitcoin ETFs on its platform.
So frame this for us. Is this like a total 180, a complete philosophical reversal? Or is it just them being pragmatic?
I think it's a pragmatic adaptation that required a pretty major philosophical concession. It's not that Vanguard suddenly thinks Bitcoin is a safe retirement asset.
Sure, it's not.
It's that they realized pushing their own customers off their platform to get an asset they clearly wanted. that was the bigger risk to their business. But to really get the weight of this, we need to talk about what an ETF actually is and why that wrapper was the key.
Okay, let's use that great analogy from the sources. I think it makes it super clear.
Yeah, it's a good one. So think about the underlying asset, Bitcoin, as a really complex, high-maintenance food, let's say a durian fruit.
The durian. Spiky, smelly. I see where this is going.
Exactly. So if you want to buy Bitcoin directly, that's like buying the raw durian. You have to go to a special market. You have to know how to cut open that spiky peel. You have to deal with the pungent odor.
For being kind.
Yeah. And then you have to worry about storing it, securing it. With Bitcoin, that's digital wallets, private keys, hacking risks. It's complex. You can easily make a mistake.
So you're responsible for all the hard, risky parts.
Exactly. Now, buying a Bitcoin ETF, which is what Vanguard now allows, that's like walking into a supermarket and buying packaged durian ice cream or durian cake.
Much easier.
Much easier. The core value, the flavor, it's all there. But all the technical risks, the custody, the storage, the security, the spiky peel, the smell, that's all handled by the institution, the ETF provider, the supermarket.
And Vanguard was the hardest supermarket. They only sold, the safest staple foods, stocks, bonds, and they absolutely refused to stock this smelly durian.
Right. They said it's bad for you.
But then they saw all their customers running over to BlackRock supermarket to buy the packaged version, and they had to stop the bleeding. They had to stock the durian cake.
And we should clarify one small technical point here that's actually crucial. The new product is a spot Bitcoin ETF.
Okay, what's the difference between a spot ETF and the futures ones that were available before?
A huge difference. A futures ETF just tracks contracts that are betting on the future price of Bitcoin. It's indirect, it's a derivative. A spot ETF, however, actually holds the underlying Bitcoin. It's backed by the real asset.
So the SEC approving that in early 2024 was the game changer.
That was the game changer. It gave the product a level of regulatory legitimacy it never had before. It made the container much safer, which, lowered the bar for a conservative firm like Vanguard to finally get on board.
Okay, that makes sense. So the regulators gave them the cover they needed. But this pressure has been building for years. So why now? What were the specific catalysts?
Well, like you said, the regulatory trigger was number one. That SEC approval in early 2024 was the starting gun. It legitimized the whole thing.
Right.
Second, you just had to look at the competition. The speed and scale of capital flowing into these new ETFs from BlackRock and others was it was unprecedented. They were watching these funds break records for capital inflow, the institutional FOMO, the fear of missing out. It became overwhelming.
And then the third factor, and to me this is the biggest signal of all, was the change at the top. They bring in a new CEO, Salim Ramji.
Yeah.
And this isn't just any executive. Mr. Ramji previously headed the entire ETF sector at BlackRock.
That's the white flag moment. You cannot overstate how significant that is when a firm as doctrinally rigid as Vanguard hires the key architect of their rival's biggest success.
Especially in the very product area they were resisting.
Yes. It just signals a complete internal change in philosophy. The new captain of the aircraft carrier came directly from the fleet that had just outmaneuvered them.
It's a massive signal to the market that the old way of thinking is over. But let's connect this to the money. Vanguard manages trillions of dollars. What does a decision like this mean for capital flows into crypto?
The implication is massive. Vanguard's clients aren't just, retail speculators. We're talking huge pension funds, university endowments, giant conservative institutions.
Money that couldn't easily touch crypto before.
Exactly. They had legal hurdles, fiduciary duties, technical barriers. This new policy, it basically creates a super efficient legal pipeline. Now, with Vanguard's blessing on a platform they trust, billions of those conservative long-term dollars can flow into this market with literally a single click.
So the key isn't just that a bunch of individual Vanguard investors will buy it, it's that the big, slow institutional money now has a clear path.
That's the real story. It validates the asset for money managers who couldn't touch it before. It's an easy on-ramp for trillions of dollars looking for diversification in a regulated space. That's the biggest factor in the asset's long-term maturation.
So let's zoom out. What are the, say, 3 big takeaways from this whole thing?
Okay.
Well, first, it's the final legitimization of the asset class. I mean, when a company as conservative and as measured as Vanguard finally accepts the product, that sends a powerful signal to the entire world.
It's no longer a fringe thing.
No. It's officially a mainstream asset now, right alongside stocks, bonds, gold. The source had a great analogy for this. The tattooed dyed-hair youth has been formally invited to the village elders' tea party.
I love that. It's an official seat at the table. And second, it just proves the power of the market. You know, Vanguard didn't change its mind because they suddenly believe in Bitcoin. They changed because they're in the business of keeping and growing capital.
The lesson is you can't be that rigid.
You can't. Rigidity is a fatal flaw when the world is changing this fast. Flexibility is survival.
And finally, let's talk about the impact on you, the investor. If you already hold crypto, what does this mean?
For existing holders, this is unambiguously good news. The entry of these institutional whales creates deep, massive liquidity. It helps the whole market mature and, over the long run, could make it less wildly volatile, even if the day-to-day swings are still there.
And for the newcomer, the person who's been too intimidated by the complexity or the fear of scams.
This is probably the best entry point you could ask for. That psychological barrier of dealing with weird, unregulated exchanges is just gone. You're trading through a major, trusted broker. Vanguard, it takes away the counterparty risk, the technical difficulty. It makes a scary market accessible.
But, and this is a huge but, we have to end with the crucial warning. This is probably the most important thing to take away from this.
Absolutely.
Vanguard selling the packaged durian cake does not mean the durian itself is suddenly as safe as a government bond.
Not at all. The underlying asset is exactly the same. It's extremely volatile. It can go up 10% one day and down 10% the next. The safety Vanguard is providing is purely legal and custodial.
So they protect the container, not the contents.
Perfect way to put it. You won't lose your coins to a hack on their end. But they do not and cannot protect you from the price risk of the asset itself. You still bear all of that risk.
You know, this whole story, it's really a life lesson that goes way beyond finance. Sometimes the principles we hold turn into prejudices that just block us from new opportunities. Vanguard, even though they were late and reluctant, chose change over stagnation. And that's a powerful lesson.
It really is. The narrative isn't just about Vanguard. It's about staying relevant in a world that's changing at a terrifying pace. So let's boil this down to 3 actionable things you can take away from this.
Okay, first, take a look at your own personal Vanguard wall. You know, your comfort zone, your rules about money. Vanguard learned that being too safe is often the biggest risk of all. The risk of being left behind.
So we're not saying abandon your core strategy.
No, but maybe allocate a small percentage, 1%, 5%, to just learning and experimenting with new opportunities. Don't let conservatism become stagnation.
Second, adopt their method of controlled risk. They chose a packaged, regulated way in via ETFs. So if you're going to venture into riskier markets, find the safest way to do it.
Don't try to cut the spiky durian yourself.
Exactly. Buy the packaged cake, use reputable platforms, stick to foundational assets, and learn the right way instead of just gambling.
And finally, just maintain a radically open mind. Vanguard had to change because reality forced them to. What's right today might be irrelevant tomorrow. Don't just reject new things like AI or blockchain because they feel scary.
Yeah, the best thing you can do for your money is just spend 15 minutes a day reading about these shifts. Because understanding is really the only armor you have.
Which leaves us with our final provocative question for you to think about, and it comes right from the source material.
In your own life or in your own investments, are you maintaining a personal Vanguard fortress? A rigid set of rules or fears you set up years ago? What's one thing you once fiercely resisted? Something you wrote off as too complex or too risky? That might actually be your next big opportunity.
Thank you for joining us for this deep dive. We wish you the flexibility to capture the new winds of this era.